This is your weekly update for the greater Portland, Maine area. These are closed sales in the last 7 days, median numbers. Days on market came down a little bit to 16 days on market. The list to sale ratio still at 100%. It feels like it's not going to move. And the sold price came down quite a bit to $485,000. Your average 30-year fixed interest rate ticked up a little bit to 6.22%, and US inflation still at 3%. So, three things I want to talk about this week. The first one is the job market, what did or didn't happen. The next one is what is happening nationally with the appreciation of real estate. And then the third one is what about bonds and the spread of mortgages to the Fed rate? So the job market. The first detail to look at is that we have limited information. So the shutdown continues, and that means we don't have the BLS. We don't have the Bureau of Labor Statistics numbers, and we're working with limited data. So really relying heavily on ADP here, and 42,000 new jobs created, which is certainly an improvement over the last couple of months, but really historically in the last couple of years, not great. We're looking for more like 80 to 120,000 new jobs, 42 underwhelming and incomplete information. So the job market still looking weak. We just reported all those layoffs last week. So we will see where that goes. The next thing is real estate in the United States. Still a story of very regional markets. So the Northeast and Middle America continue to see appreciation in some regions, and the South and the West continue to see depreciation in value. Overall, in the United States, 1.2% increase in value over the year, but you really got to focus on where you are because some places have lost 22% value, some have gained 10% value, right? Lastly, the bond market. So the Fed chair at the last meeting said that December rate cuts are not a foregone conclusion. Bond market didn't super love this. The odds of a rate cut in December have dropped from 90s down to 69%. So people are less confident that we're going to get another rate cut in the next vote or the one after that. But this brings up another interesting conversation, which is the spread between the Fed rate and mortgage rates. So historically, this spread is like this, right? So, like this. So they borrow money from the Fed, they lend it out, and they make this little difference in between. During the very low rates, this distance got bigger, and it really hasn't closed since. So that spread is still large for mortgage lenders from the Fed, making this difference. The question is, as we continue to have low sales, as we continue to have low refis, are mortgage lenders going to be willing to shrink this spread because they want those refis, they want those new purchases? The Fed maybe is not going to deliver two more cuts in the near future. And will this spread shrink a little bit? Advice for buyers and sellers continues to be very similar to the last couple of weeks, which is buyers. There is an opportunity right now. Get out there, get something done, negotiate well. And sellers, you must have your house ready for the market, and you must price appropriately. Buyers have so many other things going on right now that you need to put your house front and center as in great condition and a great value for them to make them act on it. I hope that was helpful for you. Have a great week.